No matter how heated the rhetoric gets, there's no denying that the future of China and the U.S. are closely intertwined. So where is China headed? Ian Bremmer, he's the president of the political risk and consulting group Eurasia. He was just at the IMF's annual meeting in Tokyo. He says there are a few misconceptions about the world's second biggest economy. Ian, good to see you. Your first one you talk about, the first misconception is that, and we're going to get the GDP numbers tomorrow, you're saying China does not need to grow at 8% a year to maintain social stability. It's a myth that it has to grow at 8%. Talk to me about that.
That's right. That's been out there in the newspapers for a very long time now. But a couple of points. First of all, as China gets wealthier, they're not going to keep growing at that level, but nor will their people demand it. In Shanghai, where per capita income is $20,000 a person per year, they're much more interested in quality of life increases than they are in making sure that they continue to have that 8%. It's much less about just getting people jobs than it is about what kind of governance you have. The Chinese government, of course, does put out those numbers, and then they hit them. The fact that the Chinese government themselves have been willing to say, we're not at 8, we're under, we're going to be 7.5, we're going to be a little bit less, that shows that they increasingly are comfortable with that as well. This 8% number at this point is a myth.
But people say all the time, China is on the march toward being a free market democracy and cannot be stopped.
Yeah, and that's another misconception. It's certainly possible that when the Chinese government finally decides that they're going to engage in more serious reforms, that they will move towards more representative democracy, and they'll move more towards a free market. But right now, they're a strongly state capitalist, and they're a strongly authoritarian state. And to make those changes requires the government to take a lot of risk on themselves in terms of their own survival. I would say that when the Chinese government finally decides they're going to start, that it is time, that they do hit this crossroads, that maybe they move towards reform, but quite possibly it's too dangerous for them, and so as a consequence, decision-making starts to fragment and decentralize, and that what you see in a place like Shanghai is very different than what you see in the interior. And there's a third option, which is that if the international environment gets worse, you start to see a lot more xenophobia, a lot more militarism, the kind of things you've seen against Japan throughout China over the last few weeks become something we feel very much here in the United States. Those are very plausible outcomes. They're not democratic outcomes.
Let's talk about investment. Even when China was at 10% plus growth, and now we may get numbers lower than 8, stock performance didn't keep up with that. There was no connection between stock performance and GDP growth. So as a global investor looking at China, you can't fake it. When you go to Shanghai, it doesn't look like anything else on Earth. It looks like something from space. You can't fake the fact that there is some real growth in China. How do you take advantage of that as an investor?
Well, there's a lot of real growth in China, but the fact that there is real growth does not mean you will necessarily benefit from that growth. The regulatory environment is very opaque. There's no rule of law. And so if you're a company that's able to invest in China and there aren't any local competitors and won't be, you can do very well indeed. So the market for luxury goods, where there's not easy Chinese substitution for branding, you look at Louis Vuitton, for example, they are cleaning up in China right now. You also look at Coca-Cola, or you look at Yum Brands, KFC, which are doing much better in China than they are in the United States. But for many companies where there are Chinese competitors, or there will be, life is very, very difficult. And here you talk about the Boeings, you talk about Microsoft, you talk about Motorola. I mean, or companies like Facebook that would love to connect everyone in the world. They've got 1 billion people right now, but over 500 million in China, and they don't want Facebook because they don't want an American company controlling that data. So you really have to look at the sector and what the government is. This, unfortunately, when you talk about China, the politics play at least as much as a role as the economics in determining whether your investments are going to be safe over the long term.
Can't believe it. You said Yum Brands and Coca-Cola. It's not even 10 o'clock in New York. You made me hungry. Ian, always a pleasure to talk to you. Thank you, my friend. Ian Bremmer.
Stay away from those, Ali. Good to see you.